Hey guys, it's Carter. I just really quickly wanted to show you a chart that I find fascinating right now, but please remember that I am not a financial advisor and that I don't give financial advice. All right, so we're looking at the frozen concentrate orange juice futures chart right here. This is the monthly chart. So I'm actually using the frozen concentrate chart to analyze orange juice here just so I can see the price history more. Because on the monthly chart, this matters. So you'll see a zone here on the screen from around 190 to 205. This served as 40-year-long resistance until 2022, where we saw a breakthrough of this resistance here, nearly 40 years later after this level started to become resistance, and then we've been on an absolute tear since. But I'm seeing some signs in the high time frame charts that the fun might be over or near over. So I believe we are near a long-term top on the chart of orange juice here. Why do I believe that? Well, let's look at price action first on the monthly chart. This purple candle that we printed in September, let's zoom in on it here. This is a gravestone doji. So on a gravestone doji candle, you see a long wick to the upside, little to no wick to the downside, and a tiny little body. So this at the top of a very extended rally is a potential bearish reversal signal. The way you nullify that is by closing above the top of the tail here. So if we close this October month or any month down the line above 510, I will consider this a nullified bearish doji. But until then, this is an extremely powerful, potentially bearish reversal signal. And we can't just ignore that. So monthly chart, powerful bearish signal. We're at 494 right now. Need to close at 510 to nullify that. If you look at our RSI, consistent lower highs now. So we had our high right here, and then a lower high here, potentially more of a double top than a lower high. But now this right here, an extremely lower high. So we're seeing higher highs in price, but our strength index right here, lower highs, consistent lower highs. That's not a good sign. That also signals that a bearish reversal is likely to occur at some point. And now look at our momentum. So you can find market structure and everything here, and look at the support of our momentum on these two pivots at the 50 level on the stochastic RSI. We're now rallying our momentum into this 50 level, and it's going to act as resistance. So the 50 level on the stochastic RSI might act as some resistance. So if momentum begins to turn around right here in a month or two, then we might see a turnaround in price. And eventually, in the next maybe 5 to 10 years, I would anticipate a move down to reconfirm this market structure here. So call me crazy, but it is possible that orange juice from 494 today could come back to the low 200s to confirm this market structure. Because the markets have this funny way of doing things that once you break through a level, you often return back to that level at some point in the future to confirm it as support. We broke through that 190 to 205 resistance level. We never came back down to confirm it as support. We could do that in the next 5 to 10 years. And if we came back down to this 190 to 205 level, it would offer us a huge buying opportunity, and you'd see huge support in this level down here. So it's not only the monthly chart that is somewhat concerning, you see the divergence on the weekly chart as well. So that's not very bullish. In fact, it's bearish. And you see a bearish reversal pattern that's forming here. This is a rising wedge. Not a good sign. So yeah, more bearishness on the weekly chart after an extended move to the upside, a very extended move to the upside. Plus, once again visible at the top of a market, a bearish reversal candle, once again, a gravestone doji that we printed on the week of October 14th. So the way you nullify that is by closing a candle above there, so aka breaking above out of the rising wedge at this point, you'd have to consistently close above 510. If we can't do that, well, then we have potential signs of a bearish reversal looming. So the long-term threat to the price of orange juice is there, but now we are actually still bullish in the short term because we're still holding this support level from January of this year. And as long as we're continuously bouncing off this support level, off this support line, then we're in an uptrend. So we're in an uptrend until broken. There is threat of a reversal from the high time frames, but on the daily chart, a lower time frame, we're still bullish and we're still potentially looking for maybe a little more upside. It's possible. As long as we're holding this support, we can see upside. But if we're breaking below this level here at 470, keep in mind it's ascending, so this level will be higher in the coming days and weeks. As long as we're holding 470 for now, we're still short-term bullish on this chart, but the threat of a reversal is there. The moment we close below that 470 level or this ascending support line and hold it as resistance, that's when the downside becomes more probable, and we will eventually see some larger form of a correction. Who knows if it's down to the low 200s or not, but mark my words, we are at or close to a top on orange juice. All right, that's all I have in this video. Have a good one. Stay safe in the orange juice market.